Hi everyone. There's multiple technical definitions of how mobile wallet works, from pass-through to back-to-back. But in principle, digital wallet, the way we define that, is a combination of all your finances in one place, enabling you to see your money in one place. Of course, it became money is not just about the account level balance or how your money is moving and how much you're spending. Money is also about understanding your identity to be able to onboard into different financial products and services. And with identity comes, of course, the ID management and so forth. And it's going to be very nice if I can also open my car keys, my car doors, or my house doors with keys as well. Because in the end, wallet, keys, ID is what people are leaving home with.
So Oliver, when I spoke about phone, kind of combining some of the two, now actually a digital wallet is more than just what you have on your mobile.
Yeah, absolutely. So I think, from a digital wallet perspective, digital wallets aren't anything new. I mean, you look at PayPal's been around for 20 plus years, right? So digital wallets are not new, but I think from a Samsung perspective, and when you look at the mobile operators, it's very much about that mobile wallet experience. So we expanded from Samsung Pay to Samsung Wallet in 2022, and as Shachar was saying, it brings in a whole ecosystem of new use cases additional to payments. I mean, payments are the biggest part of a mobile wallet or a digital wallet for sure, but I think now the opportunities to manage your life through your mobile phone, some of the examples Shachar just shared there in terms of your home key, your car key, adding the functionality from those manufacturers as well, and all the things like boarding passes, ticketing, etc. as well is all part of that mobile wallet experience today.
So tell us about Curve and then how you partner with Samsung.
Of course. So Curve started in 2016, and back then in 2016, if you remember, there was this journey of unbundling of the banks. You start to see a lot of fintechs trying to create a better banking, a better remittance technology, and it was all well and good, and there was and still are opportunities to become better than your bank. But with unbundling of the bank comes more fragmentation, more financial tools and products you can use. And as consumers, it's really hard to figure out what's the right tool for me and manage everything into multiple apps that are bifurcated against each other. And so the question really Curve had back in 2016 would be, what's the end game of the fragmentation or unbundling of the market? And it's a very known solution that markets that unbundle themselves will eventually rebundle and bring everything into one single interface, like Spotify for money, Amazon for shopping, ASOS for fashion, Booking for travel, and the list goes on. So the only question Curve had is, if the market will eventually rebundle itself, what is going to be that race car that would win the race? And the answer for us was a wallet. But the answer of a wallet wasn't that simple one, because just a wallet that replaces my physical card with a digital card, which is what Apple and Google and the rest are doing, is insufficient. I want a wallet that basically brings all my money into one place and enables me to have read-write access and move money around between accounts. For example, the Curve notorious go back in time travel capability, where I can make a transaction on one account, and after the fact, I can move it to a different account, which gives me more rewards or reduced borrowing cost. So with that view, we started to build an ecosystem that required us to coordinate multiple gatekeepers, from Visa to MasterCard to various OEMs and regulations, to enable us to create a mobile wallet that is better than the likes of Apple Pay. So think of it like Apple Pay, but with a card, because I can't shove my phone to an ATM. Think of it like Apple Pay, but it makes all my cards 0 FX. So I don't have to worry about FX anymore. Like Apple Pay, but with time travel capability, and so on and so forth. And we started to build that, and because Apple have blocked their NFC chip historically, they finally conceded in January to open the NFC and open up the wallet to competition. Curve worked always and led with a physical card. So what customers do, they put in the Curve card inside each one of the devices, whether it's Apple Pay or Google Pay, and they stop using those interfaces, instead using the Curve interface to change the card, go back in time, and so on and so forth. And at the same time, around 2020, we saw there's challenges for the likes of Samsung, where because Apple blocked the NFC, banks like Barclays or RBS had no choice then to pay ransom to Apple Pay and enable them to load their Barclays card into Apple. And that ended up with a huge coverage of banks to Apple. So now everyone who has an Apple device can probably load most of your cards to Apple Pay. But Samsung customers did not have this experience. Samsung, because they went with a very open, market-led consumer-led strategy of opening the NFC, that meant that Barclays did not have to participate with Samsung in the UK, and it just told their customers, if you want to use your phone to pay with, open your Barclays app and pay it. So if I have 5 cards, 5 banks, if I want to pay with one, I have to go look for the app and pay with that. But Curve technology is unique in also many other advantages where we are able to get 100% coverage to all banks. We don't have to partner with banks directly, we just open up the entire market. So by partnering with Samsung, we enable them to bridge gap, leapfrog completely the coverage of banks. So while they keep tracking and bringing more banks along the way, immediately can offer their customers the ultimate wallet, Samsung Pay Plus, powered by Curve.
I'm glad you brought up Apple Pay, and I think Apple would argue they don't charge a ransom to the banks, but they have created a secure system. But I guess it depends which side of it you're sitting on.
Well, luckily the European Commission have already agreed.
Well, let's talk about that. So the Digital Markets Act, I've been reporting on this quite a lot recently, is forcing Apple to open up its walled garden, which they say will make their systems less secure. But putting that argument aside, Oliver, how is that regulatory landscape changing things at the moment for digital wallets? Because we've got that and then open banking at the same time.
Yeah, absolutely. So I think it is going to change things massively now, because I think a lot of other operators in the fintech space have been holding off their plans and strategy in terms of what to do on iOS devices. So we're obviously an Android-based system. We're open platform, as Shachar said. We can work with lots of partners like Curve and have the benefits that they bring into our wallet experience. And we can also allow anybody to have access to our NFC chip and build their own technologies on our platform as well. So I think what it will do on the iOS side now is it will change the game in terms of some of the large players reevaluating their strategy in terms of what they're going to do on iOS devices. And ultimately what that will bring is a lot more innovation into this space. And it will also increase a lot more choice for consumers as well. So we see benefit across on the Android side as well, but I think you touched on it there, where I think the really exciting piece is coming in the future is then open banking and beyond, and what that really means for mobile wallets in the future. And we're only really just starting to scratch the surface of those capabilities today.
And so what will that offer customers in, say, 10 years' time? What do you think we'll be able to do with open banking on a digital wallet that we can't now?
Well, honestly, the possibilities are endless right now. I mean, we had a really good conversation just before coming on stage in terms of the challenge we've got is how you present these experiences to consumers today. And you mentioned it as well with the Apple experience that you've seen today, where the balance is already displayed in the wallet on your mobile device. Now, do you want the person sat next to you on the bus to see that balance or not? That might scare customers off. But what we've got to think about is what are the right experiences that consumers actually want from open banking, open finance and beyond, and how do you bring those experiences to customers in the right way? So I think we're starting at a very basic level today and thinking about what features can we bring in. There are some players out in the market that are already doing some pretty nice stuff with open banking. But with PSD3 coming in 2 years' time with open finance, and then there's also the open data, and it was touched on in the opening remarks this morning around this open data economy. And when we're talking 5-10 years from now, it's just extraordinary to think of the opportunities that we have to present customers with insights using their data. And this takes it beyond payments. It takes it into lifestyle elements like what are you watching on Netflix, and are you getting the most out of your subscription services? So way beyond payments. I think it's really exciting, but really just scratching the surface in terms of those capabilities.
And you talked about it a bit, but how are you finding dealing with the traditional banks?
We work with traditional banks mostly to do partnerships that are additive to our customers in value or distribution. I think if you look at the journey in the past 6-7 years, banks, when the unbundling of the bank began, start to be very concerned about taking away market share, especially on the FX side. But in the end, that's exactly what the PSD2 went about, and open banking, to create more competition. And competition is always healthier. Now we don't see banks mostly around the concern. They're seeing banks as opportunities they can partner with different brands and get more to customers and more origination of products. So a good example, connecting to the previous question of open banking to this question, imagine a world which we all start working on with different banks, whereas a customer would tell you, hey, we can save you £300 a month in borrowing cost. Would you like to continue? And with one tap, the customer can see the offering of refinancing their debt with another lender, let's say Barclays, for example. And the third tap, we immediately go back in time, move money around between a very expensive credit card to a lower cost-based amortized loan or a lower cost-based credit card. Today, most customers can do it by themselves, but they lack the awareness, they lack the time, or the patience to provide due diligence, KYC, and maybe 2 weeks later, refinance a very expensive loan. But with open banking and with banks partnering more with fintechs for origination and distribution of products, you can merge the two together and just get better results for consumers in the market, which I think is the intent of the CMA and the PSD2, PSD3.
But I think what will scare some consumers, Oliver, I'm sure you see this, is what happens to privacy. When you talk about this app that becomes a sort of all-doing app and everything's involved in it, how do you reassure people that they can trust companies with their data when it's so extensive?
Yeah, absolutely, great question. And I think it's, it comes back to this, education for consumers. But also I think, open banking really started from Europe, and UK is leading in many ways because it's regulated. And when it's regulated, that's a good thing because it means that all of the companies that want to operate in this space have to take things like security really seriously. So I think, when it comes to customer data and privacy, a lot of the data, we don't hold any data, we don't hold any bank card details, for example. It's all tokenized, it's held securely on our secure element on the mobile device itself. And then on top of that, there's a layer of additional security of encryption through the Samsung Knox security platform that we have that holds all of the password information and any other data in a separate space and has another layer of encryption on top of it as well. So I think security is a concern for customers, and I think that's part of that, taking them on the journey and not shocking them with experiences that thinks, hey, how did you get my data? How did you use my data in this way? And making them aware of the experiences that can be possible.
And how about at Curve? Are you seeing that as a barrier to people taking up the service?
Security and privacy is top of mind, and we did build the product day one with that view in mind. We are using, like all the other players in the market, with tokenization, PCI DSS practices. Curve has a unique offering where you never need to expose your underlying card details as you do with other mobile wallets. You always have the Curve firewall card that protects you from other cards. But in the end, the way we think about privacy and security when it comes to customers' data, it's about how much data the customer is willing to give Curve in a secure environment and how much value they get in exchange. Data is very much like a currency that customers are willing to give away for value. The best example is to see with Instagram, TikTok, and Facebook, there is no privacy in the systems, yet customers still keeping engaged with that. And the reason why is because they get value. So as long as you meet that trade-off of value to customers against the data, it can help you save borrowing cost. At the same time, security and privacy is top of mind, and the company does everything in its power to make sure the data is safe and everything is tokenized. Then I think there's a very clear way how to provide value to customers.
Do you think that's different in the UK at all? I was quite struck looking at the numbers that, I spoke about how many people are using digital wallets at the start, but actually it is lower in the UK. Do you think people here are less willing to do that exchange of their data?
So in the UK, I think it's about 35% mobile wallet adoption, whereas in the US, if you take those markets, in Canada, it's about 45 to 50%, which is quite a significant difference, especially where the UK actually were the first to start with that. The UK market was actually leading in the world up until 24 months ago. And comes the question, why? So we don't know, I don't personally not know exactly why, but when I correlated this data with iOS adoption data, you would find a huge correlation between countries where iOS is adopted more than Android devices than countries that don't. So if you look at the US, it's a majority, 60% iOS market. Canada is close to 70%. And in those markets, you see 45% to 50% adoption, respectively, in the US and Canada, mobile wallets. And why is that? And why there's high correlation between iOS and adoption of mobile wallets? Simply because Apple got the NFC blocked. And because of that, the various banks in the market could have no other choice than to partner with Apple, and therefore create a better customer experience for customers because now they had all coverage of all banks. So it's easier to adopt. If my mobile wallet only allows me to add one card out of the three, it doesn't do what it says on the tin. I cannot use it. But when it does, more likely to use it. And that's exactly where I see, if you look at the European Commission case against Apple, you really see there the mobile adoption that doesn't create good competition to companies like Samsung, Android, Google, and so forth.
It will be fascinating to watch how the Digital Markets Act changes the situation over the coming years. Thank you so much to both of you. Can I have a round of applause for my guests, please? Thank you. It is time for a 15-minute break now, so it's, 11:35. So if you could be back here, please, for 11:50, and we will kick off the next sessions. Thank you.